A lovely morning to all. In this webinar, we delve deep into the global electric vehicle market, exploring its transformative impact on the automotive industry and beyond. China was the world's e-mobility hotspot in the year 2023, with the highest penetration rates. One out of every four cars in China in 2023 was a BEV, battery electric vehicle. Battery electric vehicle growth remained positive across major regions, but it was slower than in past years for several reasons, including a lower consumer demand stemming from a more pessimistic macroeconomic outlook and lack of new attractive models for the BEV segment globally. Today we have Senthil Manikandan, senior research analyst, taking us through the presentation. Let me cordially invite him to take over. Thank you.
Uh, thanks, Tarun, and good morning to everyone for joining us today on this webinar on the global electric vehicles industry. Uh, so currently, if you see the uh, demand scenario on the EV side, there has been some slag in terms of or a slowdown in terms of sales globally. And we're seeing a lot of interesting developments happening on the supply side also. So with this nature, we thought of doing a webinar on particularly on the global electric vehicle market. So the structure of this webinar could be we'll be starting up with the passenger cars first, and then the second part we will go to the electric two-wheeler, three-wheelers, and then we will end the webinar with the electric bus segment. Uh, because these are the three segments which we are seeing increased rates of adoption across various regions. Just the opening remarks on the industry side. If you look at on the demand side, last 3-4 quarters, if you look at key regions like US or Europe, there has been some slowdown in terms of sales. So there are a lot of various factors that the companies are highlighting. One is with respect to the higher interest cost. Uh, in inflationary environment is pulling down the consumers' purchasing power. And second reason that's broadly highlighted is that the early adopters of the EV product has already exhausted. So the early adopters are one who buy the product for a experience basis. And as we saw that last 5 years, as the EV penetration has gone up, the early adopters are normally exhausted now. So now the buyers are mostly in terms of need-based buyers. So that's also one major reason that's being highlighted. So these are the demand side. On the supply side, if you see that, so the key raw material for the batteries is lithium, the key mineral. So lithium prices are down close to around 80% if you look at FI November 22 to last couple of months. We see there's been a drastic drop in the lithium prices. So so that has obviously been passed on to the consumers in terms of lower prices, and we are seeing the prices falling down considerably. Even the market leader Tesla has taken a slew of uh, uh, price downs in the last couple of quarters. One major reason was also competitive intensity. So of late, we have seen Chinese OEMs like BYD or, for example, SYPS, SCIC, Leap Motor. All these players are gradually improving their export market. So on the demand side, we are seeing slowdown in sales, but on the supply side, there has been increased intensity in terms of competition. So that's where the current industry structure stands. So this is opening remarks. So we'll go to the first part of this webinar in terms of electric cars. So globally, for the calendar year 2023, the market size was close to around 14 million units. So much of the sales are from the three key regions in terms of China, US, and Europe. And so put together, these three regions formed a close to 90% of the 95% of the total sales. And if you want to take in terms of penetration, right, it's close to 18% of the total passenger vehicle car sales. So as you can see in this chart, uh, compared to just 5 years back, from 2% penetration levels, we are now close to 18% penetration in terms of global level. One key point we have to note is that this 18% is coming from a concentrated sales happening in the three key regions. If you ignore China, US, and Europe, so remaining regions are just 5% of the total sales. So that's where the industry is currently positioned. And look at the cumulative both electric and plug-in EVs on road. So if you see that currently totally around 40 million vehicles are on road. So this is the current stock on road, and you can clearly see that China, both on the pure battery electric vehicle and on the plug-in electric, both contribute close to around 15 to 20 million units. That's just stock is in China, and you can see that Europe and then US. So rest of the world, in terms of penetration levels, are in very low single digits. So there are various reasons uh, that's point to this higher adoption by a particular region versus others. For example, in China, right? So the government's intense focus on developing the industry in terms of providing subsidies right from the uh, supply chain levels. So China is present or have a dominant presence across the supply chain of the entire battery vehicle unit. So they start from lithium mines to chemicals, then the battery cells, and then the battery module assembly, to final manufacturing of EVs. I think over the entire supply chain, the government has focused and they're given subsidies at various levels, and with local government support, so they have been able to build this industry at the global level. So currently, this also resulted in over competition in their country. So now Chinese OEMs are looking to expand outside of China. So they want to conquer the export market. So now interesting developments are that they are setting up new plants in Latin, Europe, and Southeast Asia. So either by a greenfield plant or they are forming a joint venture with the existing region-based OEMs. Thereby, they want to expand their own market, and we will see in the subsequent slide in terms of what's the export, how the export market out of China has evolved over the last 5 years. So if you take the last 3 months, right, Jan to March, last 3 months, um, the key regions, I think, as in the opening remarks, as I said, there has been some slowdown in terms of growth. And but another interesting trend that has been happening is that there has been increased adoption rate in terms of hybrid cars. Um, so usually, a couple of years back, if you read the commentaries of the OEM management in their conference calls, most of them are pretty much bullish on EVs. And then if you looked at the capex that the OEMs have planned over the next 5 years, 10 years, and it was very bullish. But of late, the commentary has been a bit muted on the EVs, and many of them have started increase the focus on the hybrid electric vehicles part also. And this has to be with the slowdown in EVs, followed at the same time there has been an increased adoption in terms of plug-in hybrids. So I think this could be a transition period in terms of EVs. So that's fair. But long term, I think most of the OEMs are still bullish. I think there is just a transitionary downfall in sales. So Q1 sales in terms of region. So in terms of concentration of sales, that continues. Top three regions constitute of more than 90% of the sales. And so we can't compare quarter over quarter sales, because usually Chinese as a bulk of the sales coming from Q4. So if you look at year over year also, there has been a growth, but the growth has been much more moderated. So if you look at it in terms of penetration, right, like what we saw, this is from a slide from Tesla's presentation. So where
So sorry, just give us a second. We're sorting this issue out. So sorry. Hello.
so is the screen visible now?
Yes, sir. It's visible, sir.
Yeah, thanks. Oh, sorry, I think there was some Wi-Fi issue with the connector. So I think we were on this slide on the penetration levels. So what I was saying was that uh, if you remove China, I think the ex-China, I think the penetration levels continues to be in low single digits. And when analyzing any OEM strategy in terms of their powertrain technology, I think we have to keep this data in mind in terms of uh, the EV adoption rate is going to be much more in at a moderate phase, particularly in the developing countries. So in terms of uh, adoption within the developed countries also, we are seeing contrasting signals, uh, particularly if you see Japan and Korea versus Norway and Sweden. The lower penetrations we can see in Korea and Japan, or at the same time, Norway and Sweden, they're mostly like 100% penetration levels. So these are countries which are part of the developed regions. So it's not that we are seeing contrasting adoption between the developing and developed countries of EV, but within the developed countries also the adoption rates quite drastically differ. So this has to be majorly the factors like presence of the OEMs in the particular countries, preference towards hybrids, for example, in Japan. So that's why the contrasting signals. So that adoption is nothing, uh, seems to be nothing. Majorly the household consumption or the expenditure doesn't be a major factor in terms of adoption rates. Coming to the developing countries, so so for the developing countries, especially in the Asia, Southeast Asia, the predominant mode of mobility has been the two-wheelers and three-wheelers. So the personal cars market, if you compare in terms of volume terms, are pretty much low, and even on the penetration terms also, it's quite low compared to the developed countries. So even in India last calendar year, if you look, I think we have sold close to around just 80,000 units of EVs. These are electric cars versus the entire market size of close to around 4 million units. So that's amount like just 2% of the total market. So this phenomenon is reflecting in other Southeast Asian countries also. And yeah. So we can see that in Vietnam, Indonesia, and Malaysia, so the adoption rates are in the single digits kind of range. But even within the developing countries, right? I think if you look at the apart from India, I think other countries have a predominant presence of Chinese OEMs present in those countries, and either the Chinese OEMs are preparing for a greenfield expansion in these Southeast Asian countries, or they're just exporting it from China. So, except for India, I think where the homegrown Tata Motors has a bulk of the market share in EVs, close to around 70 to 80%. Other regions, Chinese presence are much larger. So on the demand side, one of the key reasons for slowdown also typically cited is that governments have, with increased adoption rates, I think governments have started phasing out of the initial subsidies that they offered to the customers. So China was like close to a decade. They have been supporting purchase of EVs under their new energy vehicle policies. And last calendar year was first year in terms of the industry posting volumes without any major subsidies from the national government. USA, I think they continue to offer subsidies in terms of tax credit to the customers, but they have currently moved to a more stringent domestic value addition. So in terms of if the vehicle has to qualify for the tax credit, I think it has to have a domestic content, a certain limit of domestic content which has to be manufactured in the USA. So similar to what India had in the FAME 2 of policy. So similarly, US also adapted to that domestic content requirements. Even in India, we saw that FAME 1 was there, then FAME 2 lastly expired in March, and then we currently have a policy for just for a quarter or so with outlay of just 500 crores. So I think post the elections, I think we made the government as to review this, and we might get a new demand side policy, but there is no currently there is uncertainty in terms of what and how the policy would look like. So the FAME 1 and FAME 2 was mostly on the demand side, and we got PLA on the supply side. So now going forward, will the and we have to look at the quantum also in terms of FAME subsidies were close to 10,000 crores of outlay. So we have to look at both the quantum and how the government is planning to subsidize the industry. Similarly, in Europe also, we have seen a lot of countries there has been phasing out of purchase subsidies. So demand side, so the for the customers on one side, there is inflation and higher interest rates uh, put together plus subsidies. I think that's impacting the entire retail purchase price for the customer. So now put together, I think these are the key factors that has been impacting the sales, and as reflected in the last quarter results of Tesla. I think for after like close to 4 years post COVID, like 2020, because of COVID lockdown and things like that, Tesla had were down degrowth in sales. And now post that, I think for the first quarter, Tesla has posted a degrowth in terms of sales. And one interesting scenarios happened was that BYD, I think for a brief time, I think BYD, a Chinese OEM manufacturer, overtook Tesla in terms of global sales. And it also shows that how Chinese has been scaling up their EV production, not only within China, but also outside of China. So. So demand side, we have seen what has been happening on the sales and policies and etc. So on the supply side, uh, so one key development was that the Chinese OEMs have now a clear target in terms of how much global presence they want to be over the next 5 to 10 years. And so if you look at, for example, the number one player in China, BYD. So BYD has a very competitive edge in terms of huge backward integration. So traditionally, they have been a battery manufacturers, and they entered the vehicle manufacturing. And currently, they not just manufacture their own battery cells and batteries, they also manufacture a whole lot of components in-house, like some motors and things like that. So that gives them a huge competitive edge in terms of cost. So that's where BYD comes from. And now uh, they really just want to expand their production facilities globally. So they have plans to set up production facility in Southeast Asia and Thailand, and they are looking to have a facility in Latam, and also in Europe. Countries like Turkey, Spain are looking to uh, have Chinese OEMs having manufacturing base there, because having a European membership, I think, enables these OEMs to supply to European markets, avoiding any tariffs that may are expected over the next couple of quarters. So also one more player which looks interesting was that VinFast, which is a Vietnam-based based OEM. Even last year, the company went IPO in US. Uh, Even VinFast from a Southeast player, I think they also want to expand globally. And even in India, VinFast, I think last quarter they announced their manufacturing plan to be in India in Tamil Nadu. So we are seeing OEMs, which have been so far region focused, have been venturing out of their own domestic regions and then expanding their markets. So as you can see here, currently, except for India, which predominantly dominated by Tata Motors in terms of market share of EVs, other Southeast Asian nations or LATAM, predominantly Chinese has a major presence. So, for example, Brazil, Thailand, Indonesia, if you see the Chinese has a huge market share in terms of EVs. Vietnam particularly stands out because the VinFast is has a majority share in that Vietnam market. Uh, so we have seen on the uh, demand side and supply side. So what could be the inflection point or the tipping point in terms of adoption rates increasing apart from the key regions of China, excluding China? So one key factor that we have to watch out for is this total cost of ownership. So this total cost of ownership metric includes the retail purchase price and also the cost of operation of the vehicle over this time period. So, so including subsidies, I think if you look at current market, I think in China, the total cost of operation of the electric vehicle is considerably lower than the ICE. That's why the entire market in China has been moving towards EVs. At the same time, in other markets, it depends upon the subsidies and also the ICE vehicles purchase prices. And so if you look at the next slide, yeah. So in China, across the vehicle segments, right, from small vehicles to the SUVs, as you can see that even without incentives also, currently the TCO of an electric vehicle is very much attractive compared to the ICE vehicles. So this has to be with respect to this shows that how the Chinese OEMs are very much cost competitive in manufacturing electric vehicle, that over a time period of operations is much more lucrative compared to the traditional internal combustion engine. So this we can expect this same kind of phenomenon to happen in other developing countries, but over a period of next 5-10 years. But a couple of key factors that has to that the region or the countries has to get it right is in terms of having their supply chain in correct mix in terms of backward integration, right from the lithium mines to the lithium chemicals and having the own battery cell manufacturing. That's where the Indian government's PLI scheme comes into the picture, right, in terms of PLI scheme separately for the advanced chemistry batteries and also on the PLI scheme for the automobile components. Uh, so the major idea behind the PLI scheme could be to support the initial years for the auto component and auto OEMs in terms of scaling up. So once the scaling up and supply chain is fixed, and so the Indian OEMs and auto components could be cost competitive globally in terms of EVs as concerned. So, what are the headwinds and tailwinds we are saying towards the which are the factors that impact the total cost of operation is that as we have seen in the last 1 year, so the battery price is falling not only with respect to the falling commodity prices, but also as the technology evolves and as the battery manufacturer scales up their facilities, right? I think obviously the battery prices has been falling over the last decade, and it's expected to have the same kind of trend going forward also. And in terms of manufacturing process, so ICE has been there for over a century now. So we have seen that how the companies have been able to adopt different manufacturing process, especially the Japanese OEMs who have brought in a lot of manufacturing processes, policies that enable them to capture the entire export market. So similar kind of thing could happen in the EVs also in terms of how the manufacturing process would evolve. It's like whether the OEMs will prefer manufacturing their battery cells in-house or will they outsource. So things like that will be evolving over the next 5 years. Only for a decade, we could see how the OEMs themselves evolve in the BEV supply chain. And competition, as we have seen that it's getting global in nature, but governments across globally are trying to make it uh, trying to give their region-based OEMs an edge in terms of tariffs. So last week we saw that US almost quadrupling the tariffs on Chinese EV imports. So close to around 100% tariff has been levied on Chinese EVs into US. Similarly, even Europe also last September they also initiated a study or in terms of whether tariff should be levied on Chinese imports. So regionally, I think every country is planning to have its own industry safeguarded from these uh, other countries' inflows of imports. But I think over a long period of time, I think these tariffs will be very short term in nature. Every industry has to adopt. And looking at India's policy in terms of PLI, I think that sounds much more efficient, making the OEMs cost competitive versus the global peers. In terms of headwinds, as you have seen in the last couple of years, either it be a geopolitical issues, which is impacting the supply chain, and one key headwind could be the technology. So as the technology is in a very nascent phase, either in terms of battery chemistry, what chemistry has to be adapted, either it can be LFP or NMC. So the OEMs and the auto component players are much more hesitant in terms of investments because uh, they are not sure in terms of what would be the ROI if they're going for a particular kind of chemistry, whether this particular chemistry will be relevant in the next 5 years down the line. So those are the issues uh, that are faced by the companies themselves. So particularly so this whole lot of issues will impact the adoption and also the affordability of the EVs. Um, So in terms of market again, so China has shown that how EVs are affordable across uh, right from small cars to the SUVs and over the last 5 years. So for example, in terms of small cars, right, if you see 2018, only a small portion of like 3-4% of the uh, uh, car market, that is 3-4% of battery electric vehicles was much more affordable in terms of or less expensive than the conventional ICE. But now if you see that more than 80-90% of the small cars which are in small electric cars are much more affordable than the ICE vehicles. So it shows that as the prices become cost competitive, then the adoption rate drastically increases within the next 5 years. So this is where the TCO metric comes into the picture, and it has to be closely looked at if you want to just guess what would be the adoption rates in India going forward. And the competitive intensity, as we spoke, if you want to just compare the prices, right? I think because of competition, I think Tesla has been taking price cuts over the last year, and one reason this could be also to with respect to the falling lithium prices also. So that's where so the increasing competency is what at one end it's good for the consumers in terms of lower purchase prices. Um, so this is the market share of Tesla in their key three regions where they have their own manufacturing plants. So we have seen that last quarter there has been a fall in market share of Tesla across all the three regions. So this shows that higher competitive intensity by these other OEMs, especially Chinese in these regions. So after the uh, uh, demand side, supply side topics, I think one more interesting topic was that exports. Uh, so if you look at the Chinese exports, so China was not a major player in terms of exporting cars till like 5-6 years back. So they have been doing close to around 1 million units. But last 3-4 years, their intensity has increased considerably because one reason could be that as the Chinese consumers move to the electric vehicles, so China is left with a huge amount of capacity on the conventional ICE vehicles. So they have started exporting the ICE vehicles across the globe. Particularly, I think a huge majority part could be towards Russia too. And on the EVs, as they are much more competitive, as they also started exporting EVs. So over the last 3-4 years, I think their exports have been growing at a phenomenal pace. That's such that uh, currently they also become the largest exporter of cars. So usually it has to be either Japan or Germany. So at this rate, I think for the calendar year 24, I think estimate is that they will do close to 6 million units of exports. So if we just compare it with the Indian market, so total Indian market size itself is just 4 million units. On the other hand, China is exporting 6 million units just on exports. So this could also be aiding their Chinese OEMs in achieving more scale. This is one interesting development that has happened over the last 3-4 years. And one other key trend we have to watch out for this is that the electric adoption also depends upon the existing countries' preference towards fuels. For example, in Brazil, so I am particularly touching upon Brazil is that even in India, we are seeing that the government has been pushing for biofuel or ethanol, increased adoption of ethanol in mobility. So Brazil has been the pioneers in terms of adoption of ethanol. So close to last 5 decades, they have been using ethanol as a fuel, And because they have been the largest producer of sugarcane globally, and so they want to support their farmers. So that's how uh, the ethanol-based mobility came up in Brazil 5 decades back. So here, what the OEMs are doing is that they are adopting a different kind of powertrain, like hybrid ethanol electric models. So where the uh, it will be similar to a hybrid petrol, it will be hybrid ethanol-based electric models. And so we have to have this in mind in India also. So with the government pushing for a biofuel, or a farmer being an energy producer kind of policy, we have to see our power, India's powertrain evolution will be more or less a mix of both. It's not going to be a purely electric. It should be a mix of biofuels, CNG, hybrids, and then electric. So unlike the West, where the US or China is purely electric, India's adoption is going to be a mix of various powertrains. Yeah, so this is where I'm coming from. So, um, so this Toyota's last presentation where so they have mentioned is that they are adopting a multiple powertrain strategy. So starting from the ICE engines to hydrogen-based ICE engines and hydrogen fuel cells, and then biofuel, going to the plug-in hybrids, then hybrids. So I think the India's adoption would also be in the similar pathway, considering that see, the market leader in India is Maruti Suzuki, and so globally, Suzuki Motor Corp and Toyota have the technological collaboration. So with that in mind, I think the powertrain evolution could be on the similar lines in India too. So in terms of outlook for the electric cars, so the growth rate could moderate this calendar year. We can't expect the same kind of growth rate that happened in the last 5 years. But on the other hand, it's going to be growing industry only. Uh, so and the penetration levels will increase from here, and the much of the penetration increase has to come from the rest of the world. So that's where uh, the outlook stands as of now. So that's broadly with respect to the electric cars in terms of demand, supply side, and what's happening in the couple of key regions and outlook. So we'll move on to the electric three-wheelers and two-wheelers. So these are much more relevant in terms of to India, because most of us have seen this adoption happening, especially in uh, tier one cities and metros, where we've seen the two-wheeler adoption in terms of scooters has increased to double-digit rates, particularly in the premium scooters. It has been increased adoption over the last 3 years, and on the three-wheelers, the adoption rate has been increasing. Particularly on the e-rickshaw side. So that's not predominantly present in the south, but in the north, we can see that the battery operated e-rickshaws are now predominantly present. Um, so the for the two-wheelers and three-wheelers, its markets are mostly China, India, and the Southeast Asian nations. Because if you look at the entire market size in India and China, it's roughly around 19 to 17 million kind of market. And Southeast Asian market will be much more smaller than the Indian China's market, but that's where the bulk of the volume stands as of now. And in terms of adoption rates, if you look at in two-wheelers, so current penetration of two-wheelers in India is close to around 150 per thousand. While the passenger vehicle, this put together ICE and vehicle, the entire market adoption. So the two-wheeler entire market adoption, but within that adoption, if you look at currently the share of electric two-wheelers and three-wheelers is just around 13%. So for exact numbers, I think we've been close to around 17 million two-wheelers last year, financial year FY24, and two-wheeler sales could be roughly around touching 1 million units, and three-wheelers would be like around 500,000 units. Yeah. So in terms of electric sales in the three key regions, So adoption rate has been increasing as we have seen in India also. Chinese, I think they post some subsidy removal. There has been some slowdown in terms of two-wheelers and three-wheeler sales over there. Because of that, last year India has become the largest market for the electric three-wheelers. So that we will see the subsequent slide in terms of numbers, but just on the bit on who are the major players in India in terms of electric two-wheelers. Um, so if you compare last 2 years, there has been some consolidation that has happened in the industry. Still the market is down. Still market has close to more than 100 players operating. But over the last 2 years, the top 4-5 players have garnered close to more than 70-80% of the market. So I could say that the consolidation in the electric two-wheeler market has already happened in terms of things. So apart from the existing two-wheeler players like TVS and Bajaj, we got two new players in the market, Ola Electric and Ather. So these are, I think, market going forward will get more consolidated, reflecting the what been the market structure in terms of ICE two-wheeler market. And as we saw in the electric cars market, the FAME 2 subsidy ended, and now we have the in between a stopgap arrangement in terms of a scheme called Electric Mobility Promotion Scheme that has outlay of just 500 crores. Yeah, that's just we have seen in the last slide in terms of who are the key players and how much they account for the total sales. And these are the schemes that has happened. So if you look at for the last quarter, right, last 3-4 months, who are the players? I think that similar trend continues in terms of who are the top 3-4 players having bulk of the market. If you just take the similar numbers for the effect on for like 2022, I think the numbers would have been the players rankings would be starkly different. So we would have players like Hero Electric, occupying the number 1, number 2 slots, things like that. So last 2 years, the industry has gone in for a huge change, and then now we have got clear top 4 or top 5 players in terms of market structure. In three-wheelers, so as I was saying, so last year, so India over to China is the largest market for electric three-wheelers. And so predominantly in the electric three-wheelers, I think it's e-rigs. So that forms the bulk of the market in India. So the traditional, the L5 category of auto that we see, I think that the adoption rate is around 10 to 11%. But the adoption rate in the e-rickshaws, that's predominantly present in the north, has been predominantly high. So that's major reason for this adoption has to be with the total cost of operations. So even if you compare traditional CNG run three-wheeler, I think the TCO of electric vehicle is much more cheaper on a 8-year basis. So that's where the comes in, and that's reflecting in the adoption rate. So total adoption rate of e-three-wheelers in India is 50%. So every 1 in 2 three-wheelers are now electric. So that's where. Moving to the electric bus, it's still a very nascent stage in India, and the government has various schemes running up. Like, I mean, they're having a separate schemes for the adoption for the SCTC and things like that. And over the next 3-4 years, I think most of the intercity buses will be seeing a lot of adoption rates of the buses. And similarly, I think as in the electric cars, I think currently more than 80% of these are in Chinese globally, if you have to look at the adoption rates. And in India, BYD is present with a local partner called Electra. So BYD also has a large presence in India in the e-bus scheme. Yeah, globally, China followed by Europe are the key regions for the e-bus sales. And that's broadly on the electric bus too. So I think we've come to the close of the presentation. Yeah, and I hope I have covered the three key product segments in terms of cars, and then two-wheelers, three-wheelers, and then buses to some small extents. Yeah, so thanks. And if you have any questions, just please raise your hand. So we have a couple of questions on the chat box. Uh, so prior to that, okay, I'll just start reading the questions from the chat box. Um, One question was with respect to the main component for EV batteries, critical uh, minerals. Just Yeah, critical minerals like cobalt, lithium, and for these mines present in India. Yeah, like you mentioned, China has a good presence in terms of uh, having its own mines across globally. So in India, government is having they have formed a separate strategic uh, council sort of this, via which they are trying to have stakes uh, globally in global mines. So since we don't have the request critical minerals, I think government is trying to either forming a having a minority stake or acquire mines globally to safeguard the supplies for this futuristic industry. Um, Another question is in Europe, especially in Germany, the fall in EV sales is because of removal of subsidy given by the general government that makes hybrid cheaper than yes, yeah. I think, and this could be a temporary phenomenon as the OEM scale up their production and as battery technology evolves. Obviously, the total cost of operation of EVs also could either come in line or below the hybrids. So that's over the long term. Yes. In terms of EV adoption in India, is majorly in the three-wheelers first. It's around 50%, followed by two-wheelers in double-digit range, and then cars. The EV penetration is just around 2% or 3%. So in terms of next disruption in transportation, so the disruption in powertrain will depend upon what transportation segment we are focusing on. So if it is going to be two-wheelers and three-wheelers, I think predominantly it's going to be electric. And but on the other hand, if you want to look at trucks and heavy-duty vehicles, the evolution is going to be more of a hydrogen-based powertrain. Either it could be hydrogen ICE. So the current ICE engines could be adopted for hydrogen fuel. So that could be one interesting thing what uh, the key players are working on. So depending upon the mobility segments, the disruption in powertrain could vary. So how long subsidies or incentives can the Indian government provide? So far we had the FAME 1 and FAME 2, so that got expired, and now I think post election only we will get some clarity in terms of how the new scheme will evolve. So in between we have the a stopgap arrangement, but while the rate of the quantum of subsidies has also come down in terms of because previously for a per kilowatt, I think what we used to get is now close to down by 50%, more than 50% in terms of subsidies. Uh, So post-election only we'll be getting more clarity in terms of how the new policy evolves on the demand side, incentive side. And battery technology is also continuously evolving. Now the state of the art LFP. Yes, if you look at the number one player in terms of battery cell manufacturing, and it's CATL based out of China. So they are heavily focusing on the LFP battery. I think the usage of chemistries will also depend upon the kind of vehicles and what it's being put to use for. Suppose if a vehicle is going to be a, long range used kind of vehicle, I think mostly it will go for a LFP uh, kind of thing. Suppose for an intra-city last mile mobility, I think LFP sounds good because they have a set range of operations and they can come back and charge it and go. They need not have a uh, uh, NMC costly kind of batteries, and they don't require a much faster charging time period is not required. So it depends upon what the vehicle is being put to use for. That also depends. That also decides what kind of chemistries that goes into that. Um, in terms of e-two-wheeler companies, I think the market is consolidated, and we have seen how the uh, top four players have now close to 80% market share, and uh, that's where we need to focus in terms of who succeeds in this market. And so, in terms of um, Chinese imports into India, I think currently, so if you look at the last government policy on electric vehicle manufacturing, where the government has enabled players like global players like Tesla to come and set up manufacturing base here, provided if they're setting up manufacturing base here, they are offering a window of lower custom duties. So in that way, so global players like Tesla and Infos are coming and setting up. But even in that policy, the government has said that OEMs based out of China will require much more stringent regulatory processes. So I think similar to what US has been adopting, I think India's policies are much more stringent towards Chinese OEMs, and that's also reflecting in the current market. If you look at MG Motors, so MG Motors, the parent is based out of China, and over the last 4 5 years, they have been looking for a fundraise and they will set up a manufacturing facility. But because of various stringent rules by the Indian government in terms of getting funds from China, they were not able to uh, raise funds, and eventually I think they found a local Indian partner in terms of JSW. So that's where the JSW and MG Motors partnership came into the picture. So I think in terms of policies, I think Indian government is very much stringent in um, towards Chinese OEMs. Yeah, yeah, thanks for that comment. In terms of uh, recycling of batteries, even there, a lot of startups have come into the picture, and usually post a 8 year period, that's what the current based on the usage parameters. I think there'll be a second life for those batteries in terms of static uses. Either it can be energy storage devices, can those batteries put into the static uh, power models are being explored. So so I think recycling is a big industry as the EV adoption takes up, and also like yeah, EV charging is also a key part. And one interesting point is that compared to China's model of EV charging, I think India's will be much more different, because China, in every industry, they have the policy of setting up the capacity first before the demand either comes in, and then that's how they operate. But in India, I think the charging infrastructure development will go along the lines of how the EV adoption happens. So it's going to be inline. It's not going to be that India is going to set up a huge charging infrastructure much before the demand picks up. So that's even in any other uh, uh, technology or infrastructure, we have seen that our kind of adoption is very much more gradual in place. So that has been with respect to the capital, because Chinese with their government support and things kind of subsidies, they had a huge capital inflow. But here the adoption rate is going to be gradual, and also the infrastructure development also will be gradual. Yeah, next time I think we'll cover on the incentives happening on this charging infrastructure. Sure, we'll just see that. Yeah, if anyone has any questions, you can just raise your hand or else. Will Maruti bring EVs in India soon? Um, yes, sir. I think Maruti is already in plans of manufacturing EV in India. They have just in the Auto Expo, they've unveiled their EV model, first EV model, which will be manufactured in India. And then, so the initial, I think, first phase, they are planning to export it to developed countries like Japan and Europe. Subsequently, it will be launched in India. It's expected to be in the end of FY25 or beginning of FY25, where they will start manufacturing in their Gujarat plant. So yes, they have the plans to on the EV side. One question from Vishnu. Uh, if EV market increase, what are the relative industry? Uh, so in terms of if you are asking about the auto components, uh, so the if you look at the EV vehicle in terms of major components, it's battery. So that forms predominant part, and then the all of the components that aids in terms of powertrain, in terms of motor or BMS. So that's where the three, four components that uh, who are the players in those markets. So they will be the key beneficiary in terms of seeing yeah, new growth for them. So these are the three, four components that we can look at as CV adoption increases. So why EV adoption in India is very low? Uh, so that has to be because in so in if you look at where the adoption has been higher, right, in the China or the US and Europe, so where the OEMs have been offering products which are very cost competitive on a total cost of operation basis. So where the players, for example, if you take China, where the adoption is the largest in the globe, so where the as seen the presentation, where they have a lot of models which can compete with ICE in terms of operations. So, so as we get models like suppose if we get a compact SUV which is priced at a competitive price to a existing market leader like Punch, And the total cost of operation, if works out, I think our adoption rates in India also will easily go to double-digit range in 3-4 years. It's just that the product prices has to be competitive with respect to the ICE engines. Okay, bit on the components. So other than battery, so the drivetrain components, so the motors, and then the battery management system. So these two will be the next on them. But other components are much more similar to the ICE vehicles in terms of uh, either be a braking or a suspension. There are a lot of common parts which goes into EVs and ICE. Will there be a shake-up in vehicle auto and industries in I think already most of the auto and companies have been taking up uh, either developing their own products in-house or they are forming a JV with global peers uh, to make new products which goes into the if you have looked at especially on the motors or the battery management systems, I think there will be a lot of startups also as coming to the picture. So uh, auto Ank is adopting to this EVs. And we have to be cautious of auto ancillary players who are predominantly on the powertrain side. So they may be much more impacted versus the others who are like more focused on the suspension side or braking side. They may see a lower disruption versus the auto ancillaries much more focused on the powertrain side. For the main charging infra OEMs to look out for, yes, I think uh, various OEMs are forming a partnership with the existing charging point operators, what they call as CPOs. And there are a lot of startups also in there. And Tata, they are having their preparing their own ecosystems in terms of uh, Tata Power, working with Tata Motors, and then preparing the infrastructure. Yeah. So, who's the best electric motors manufacturing company for the EVs? So the product and everything has been in the market over the last 3-4 years only. So as they complete one life cycle, we will get to know companies uh, which are really uh, brought in products which are technology oriented, and those are the companies which will survey in the second phase. So this is just an initial phase. So the product has to get into just one cycle, at least like a 6-7 years. Post that, we'll get to know who are the clear players with a tech background. So I think it's that will decide the best electric manufacturing company in the next coming years. I think if there are no more questions, we can close the webinar. And uh, thanks everyone again for joining for this webinar on electric vehicles. And yeah, thank you. And thanks, Tarun.
Thank you, sir. Thank you too. Thank you all. I think we can close the meeting, sir. Thank you, sir.
Yeah, thanks. Bye.